Welcome to this program on hedging foreign subsidiaries. I'm Evan Mahoney, founder and president of FX Initiative, an independent informational platform focused on foreign exchange. I'll be your presenter for the program ahead, and the following two learning objectives will be covered in detail. The first learning objective is to explore the concept of hedging net income generated at foreign subsidiaries and recognize the accounting, forecasting, and cash flow challenges associated with hedging future earnings. The concept of hedging net income generated at foreign subsidiaries will be discussed, and the accounting, forecasting, and cash flow challenges associated with hedging future earnings will be identified. Specifically, the inability to use elective accounting treatment for hedging forecasted earnings will be reviewed, with a focus on the quarterly earnings volatility that can arise when hedging using the default accounting treatment. A discussion of forecasting uncertainty will also be included to emphasize the difficulty of accurately predicting future earnings, which is a net number computed using multiple variables. Furthermore, the cash flow implications of hedging net income will be highlighted to underscore how a derivative may require cash settlement and can put cash at risk to hedge an exposure that typically does not impact real cash flows. Excerpts from Apple's 2015 annual report and exhibits from Apple's testimony before Congress in 2013 will also be used to demonstrate how translated earnings can have a significant impact on consolidated net income. Additionally, complications regarding the average rate translation of the income statement will be examined, and the use of an average rate derivative to better align the hedge will be considered. Finally, focus will be placed on how net income hedging is often a lesser priority in terms of foreign exchange risk management compared to the net investment component of translation risk. The second learning objective is to explore the concept of hedging net investments in foreign subsidiaries and recognize how elective accounting treatment can mitigate earnings volatility and better align the financial reporting of a hedge. The concept of hedging net investments in foreign subsidiaries will be explored, and the decision to elect net investment hedge accounting treatment for derivatives will be reviewed. The financial reporting benefits of net investment accounting treatment will be emphasized to show the timing benefit of deferring derivative gains and losses in equity during the life of the hedge, and the geography benefit of recording the derivative gains and losses in the same cumulative translation adjustment line item as the underlying net investment exposure. Excerpts from Apple's 2015 annual report will also be used to demonstrate how net investment hedging is part of their overall foreign exchange risk management program. A discussion of the strategic approaches organizations often take towards hedging net investments will also be included to show how foreign exchange risk management objectives can differ compared to the more standard objectives for hedging transaction risk. The foreign exchange subsidiary consolidator will also be used to illustrate the accounting benefits of electing the net investment hedge accounting designation, using the example of Apple hedging the net investment exposure associated with a newly formed Ireland subsidiary using a forward contract. Additionally, the cash flow implications of hedging net investments will be highlighted to underscore how a derivative can put cash at risk to hedge an exposure that typically does not impact real cash flows. Finally, focus will be placed on how elective net investment accounting treatment is particularly attractive to public companies and those that are most concerned with reducing interim income statement volatility when hedging. This course is designed for finance and accounting professionals, as well as those interested in or exposed to the foreign currency market. The overarching goal of this program is to understand the fundamentals of hedging net income and net investment exposures in foreign subsidiaries, and to recognize the cash flow and accounting implications of hedging with derivatives using the default and elective accounting treatment. Participants will be presented with an analysis of the pros and cons of hedging both net income and net investment positions to illustrate the reasons for and against hedging the foreign exchange risk associated with foreign subsidiaries.